Hey traders, welcome back to another video. We're going to be starting this video off looking at the 2019 kind of springtime. Hopefully, if you do recall, looking at a very large time frame, we had a major bearish push in around like November, October, late October was consolidation, and then November of 2018 when we broke that 6200 level of support and we had a major spill down. We had a period of long drawn out consolidation, and then we had the initial kind of start to the momentum that we had in the spring of 2019 when we went from around the 4K range all the way up until like the 12K range up here. So this is the continuation pattern that we first want to be looking at. This is the ascending wedge that had a bearish push. Some people were looking for short opportunities. I think this is a very similar situation to what we're seeing now from a technical standpoint, where we saw a very strong push from a long drawn out consolidation. This is our first major formation, our continuation pattern. We initially create an ascending wedge, if we zoom in right here, where we get a nice series of higher highs and higher lows. That's kind of grinding, not really forming a strong impulsive push from a previous high. So it is creating a higher high, but it's not like it's a very strong push, considering the previous high is not that far from it. And then we can see this as a parabolic move. So very different market structure overall. Very structured, well respected, where we see a nice series of 1, 2, 3, and then the support is even more well respected. But this key area right here around June 19th or June 3rd of 2019, we saw a pretty big correction and a pullback breaking below this major zone of confluence. If we just draw this horizontal level right here, we saw a key level of support and resistance break, and then we saw a slight continuation below this major zone. So a lot of people are obviously looking at this target zone as the first level of key support that we could be looking at, but we got a hesitation. And this, in my opinion, is kind of what we're seeing right now, where we're in a position where we could be moving lower, similar to what we had right here. A lot of people were speculating that we were going to pull back all the way to retest that $4,200 level, which we never got to, and just basically took off from that point. But what we're looking at in particular is this zone right here, where we see a big slam down, a key level of support validated. We saw a little bit of a squeeze initially right here, and then we had a spill to retest that low one more time before we get our final move to the upside. Except this time, I think it's even more valid because the volume and kind of the capitulation that we're seeing using our average volume indicator is, in my opinion, signaling and giving us more confluence with our potential final low that we saw, which did break our previous 30K zone, but unfortunately, that's just the way it goes. It's okay. The overall direction is kind of what we're looking for. Even if it's a little bit breaking below, I'm still going to be assuming that that key level of support is holding. So kind of similar to what we're seeing right now. We are seeing a nice consolidation. We saw a squeeze, we saw contraction, and then we saw a push, failed breakout, one last pullback that's very extended. That's going to be giving a lot of bears potential opportunities to be shorting, and the people who don't really have an ability to hold a lot of fear, a lot of uncertainty, because that's a long, drawn-out consolidation with that final kind of twist of the knife at the very end of the consolidation, which usually is the case, and we can see that within our current consolidation as well. So overall, after we do see that, we're looking for, obviously, the support to hold and for the price to break above this major level of resistance that we've been holding below for a while. That's really the next step for us. I think that low is in for BTC. I think we're going to be slowly continuing to the upside here. There's a few pieces of key elements that need to occur in order for us to get more validation that the price will increase to the upside, like breaking our key level of confluence. But overall, it does look pretty solid that this low is in. And then, in my opinion, what we're going to be seeing after that point is a lot of short sellers or a lot of people who are semi-long but don't think that the continuation is ready yet. They're going to be waiting on the sidelines, just patiently anticipating the price to move down one more time before they get their dip buy-in, so then they can actually continue the overall momentum. So the momentum is correct, but I think that there will be a lot of people who are on the sidelines not being able to get in, and that will trigger the next significant push to the upside, because there's going to be that fresh capital that is sitting on the sidelines waiting to get injected into the market. Once the price does move up quite aggressively and quite quickly, that's going to cause a chain reaction to some degree where There's FOMO, there is a lot more confidence in the market, and once we break kind of the key levels of resistance within the ascending wedge, it's going to be aggressively pushing to the upside, in my opinion, past the 75K towards the 100K zone, which is a major milestone for Bitcoin. Maybe even something like we can see something right here. I don't exactly know. I don't think there's going to be that big of a sell-off, but overall, what we're kind of anticipating is something like this, where you're going to see a nice continuation, maybe before the key zone or after. This one just happened to be after, where you get a nice ascending zone pressing up against the key level of resistance right there. And then that top, oh, sorry, my bad, it was support. I didn't really align those up properly. But in this situation, you saw a nice ascending zone tie and really push the price up against key level of resistance, and we see this nice ascending triangle formation, which then inevitably moved the price quite quickly and quite aggressively to the upside. So looking at a more recent time frame on a little bit larger candle formation or candlestick time frame here, this is the daily. We were looking at a 6 hour. Very similar structure where we see a nice ascending zone that we were initially thinking could potentially melt the price up. We basically got the complete opposite, where you got a move down, another continuational push to the downside, and then you get your consolidation. So this did have a little bit more of an aggressive push to the downside. Makes sense. There is more market participants with the previous 3 months that we've had just basically going straight up. So there's going to be more of a sell-off. Compared to what we saw in 2019, a lot less overall hype and traction during that period. But we'll dive into a smaller time frame here. Let's close that out. We saw the fake out. This is that descending zone that pushed the price up. We got a fake out, key level of resistance at 40.5K hold as a key level of resistance. And we're now all the way back to that 30K level of support that we talked about. Definitely take a look at the relative volume using our Performante BTC volume indicator. That is an accumulation of all the different retail exchanges, not just Binance if you're looking at Bitfinex, if you're looking at BitMEX, Gemini, whatever you're looking at. Instead of just having that one single piece of data represent the entire volume for your chart, this allows you to have a better understanding of the overall market because it accumulates all the different volume data that is out there for all the major exchanges, adds them up and divides them by how many there are, and that gives you a really good average of the volume within the market. So it's a really good understanding there, not just a single exchange. So this is that final push that I think is going to, or that final hold that support's going to need. The relative volume is substantial, where you see a lot more buy pressure than sell pressure and a lot more volume overall compared to basically the entire consolidation, kind of a capitulation phase. And when we go into a smaller time frame, we did see the price dip below the 30K level right here. I think a lot of people's stop losses were triggered at that point, where they're assuming if it's going to dump, it's going to absolutely puke. Not the case. It really just stuck its head out a tiny bit below the zone and then came right back up. The candles held, I believe, on the 6 hour and on. We'll take a look, but when we're looking at a smaller time frame, just barely ran that previous low, and then it held, actually closing above the previous open, or above the open of the candle, which is great. And now we're seeing a strong bullish candle to start this new daily candle. Still has a lot of time left, 20 hours, but overall it does look pretty strong, and our expectation is we are going to have a recovery of the price back all the way up to the 40.5K level. There's going to be some hesitancy, some resistance, some consolidation, some contraction, ideally within the 40 to probably like the 44K zone, somewhere around there. That would be a really great thing to see, even if we are breaking above and a little bit below this support level. If we see a nice pressing up against this key level of resistance, that would be looking phenomenal in my view. So moving on to a smaller time frame, looking at what's happening within this push to the downside. On the 6 hour, you do see still the candles able to hold this major level of support. You see a tremendous amount of buy pressure. We haven't seen this much volume on a 6 hour time frame since we saw the massive candle back in May 19th of this year. So a lot of people are entering. within this range. We've already looked at the institutional players, looking at the commitment of traders. Overall, the commitment of traders, in my opinion, is indicating a buy signal where there's a lot of demand coming in. There is an increase in the 4 largest institutional buyers in buying, and there's a decrease in the amount of selling. So overall, it does look pretty phenomenal where whales are accumulating and retail traders are buying in at this major level of demand as well. And when we are looking at a smaller time frame, we can see this well-structured descent. It's not an absolute puke where, let's just quickly get something like this, we're able to get like an absolute move to the downside where you're kind of getting this like arc and then a massive capitulation. It's well structured. You see a series of lower lows and lower highs, but they're holding a well structured resistance and support, and it's looking, I guess you could say, formal. It's not looking very ugly. It's looking pretty solid. So when we are looking at this major zone, you see the VSA, you see the extreme relative volume that we're seeing kind of at a capitulation phase, or a massive shift in trend. We also see a possible completion of this nice, well-respected descending zone. If we're going to go into a smaller time frame like the 2-hour chart, we can see that there is a pretty major zone. We'll look at the volume as well in a little bit. This is a pretty major zone right here, around like the 35K zone. But if you're looking at the price action right here, we can actually see a potential head and shoulders where if you're looking at the smaller term price action, let's get our head and shoulders, which is on this one actually. You see the left shoulder right here, you see the head, and this is going to be your right shoulder. Right shoulder is not as deep as the left shoulder, kind of makes sense as this was the move to the downside, a lot more volatility on the downside, and then the upside is a little bit more, I would say, structured. So what we're seeing right now is the price breaking above this major level of resistance right here. I wouldn't be surprised if we see a slight pullback, and we might have to make some minor adjustments to this key level of resistance, but I'm pretty happy with it right here with 3 valid zones. We are seeing a slight pullback. I wouldn't be surprised if it does pull back to around 33K. But overall, we have 2 validations from a technical standpoint, looking at the price action, where we see a head and shoulders completion. We see a possible completion of a well-structured descending channel. And from a volume standpoint, we see that there is a tremendous amount of buy pressure coming in with volume accumulation occurring during a kind of within the 33 to 30K zone. Looking from a volume profile, you see that buyers are more interested kind of in the top half section, which is great to see. Maybe not so much now with this major kind of relative volume day that we've had. Very, very aggressive buying during this period. And the final thing is the commitment of traders. We see that there is institutional whales basically purchasing Bitcoin and not selling as much, which is great to see, which kind of makes sense with the reduction in selling, because with the whole China FUD, I'll get into it with a very, very short amount of time. I don't think it's necessarily a bad thing. Basically, regulators are pushing miners out of China. It's not like they are unprofitable and they have to close down shop. That would be a true miner capitulation. This is temporarily stopping the operation of Chinese miners, probably relocating to somewhere like Texas, and then they're going to start them right back up again. So I think that this is a short-term opportunity for miners that are still validating the network, because if the hash rate is dropping, that is allowing them to basically mine the same amount of Bitcoin, but at a cheaper cost, so their expenses are reduced, which is a good situation if you're just thinking about a business standpoint there. So I think it's not a bad thing. Better decentralization, which is fantastic. Less miners centralized in China. Another major positive thing. So I think this is some FUD that is unnecessary. I kind of view it as a positive thing. It's not even like a minor capitulation, truly. Like a minor capitulation usually happens after a halving, because the miners literally have their revenue cut in half. There is half as many BTC mined every 10-ish minutes, which then means that the miners' revenue get cut in half. Their expenses, as long as the hash rate is increasing like it has been, their expenses are actually going to increase over time because it's going to cost more and more unless there's a decrease in competition for miners, which I do not think is a high probability. So there is an opportunity, a window where miners that are still validating the network are still able to validate a network. It's totally fine, but they're just able to make more money because there's a reduction in hash rate, which is kind of a positive thing for miners who want to get into the space because it's going to be less cost. So I think this is an overall positive thing for Bitcoin and the overall cryptocurrency community, in my opinion, where there's less kind of centralization for miners in China, which is pretty centralized right now. I think it might be like above 70%, which is still pretty high. So that's going to be my view on BTC. We're going to be seeing a potential bottom here. I don't think it's official just because I did think that that was going to be the nice potential bottom. We did see a very miniature head and shoulders. It did not break this resistance zone, whereas this current head and shoulders already has broken the key level of resistance, sitting around $33,000. So a lot of confluences coming together in order, in my opinion, for me to have a confident speculation that this has bottomed, and now we're going to be seeing our recovery. So let's quickly look at the S&P because we have been looking at that quite a bit here. Let's actually quickly touch on this before we get into it. This is actually the BTC chart right here on top, and this is the BTC hash rate. We'll get into the S&P and the DXY very shortly, but this is just an illustration that we talked about on the Discord, where there was a topic where it was a discussion between, does hash rate affect Bitcoin price or does Bitcoin price affect hash rate? My view is that Bitcoin price affects hash rate, but there's no direct correlation. If hash rate goes down, BTC price goes down immediately, or if BTC price goes up, hash rate goes up immediately. That's not really the case. And this is a really good illustration of that. Just within 3 major cases of the previous pullbacks in the hash rate, yes, the March 2020 COVID sell-off had a significant drop in hash rate. Makes sense. We also saw a major downfall in the hash rate recently with the Chinese miners having an exodus, having to move out of the country in order to relocate to basically find better regulations. And then this is the outlier here, where out of the two, there was a dip in the hash rate right here between October, let's say call it throughout October of 2020, whereas this was really the start of our bull run that we're seeing and living right now. This was when we were calling the bull run is commencing. This is the start. When we saw hash rate decreases. So that is kind of a good illustration that showcases that hash rate and the price of Bitcoin aren't extremely positively correlated. Yes, there are some correlations. If we do see a massive dump to the downside, it makes sense that the hash rate is going to get reduced because there's a certain threshold where miners are profitable. If the price of Bitcoin, the asset in which they're paid in, drops to a certain point, it's going to go below the point of them for the price of operation, the expense of actually paying for all that electricity and the staff and the rental, or if you're going to be owning a place, all that you got to take into account. Now, at a certain point, if the price is dropping below the cost of those operation expenses, it doesn't make sense. You're spending more money than you're making, so they're going to shut down the mining operation. This will reduce the hash rate, and then the only ones standing for miners are the ones that are the most efficient, that are the most profitable. They're able to get the lowest cost for electricity, usually government subsidized. And those will keep the network valid. And it's a good thing that a lot more miners are coming to the United States because a lot of them are very cheap operations in China there. So it's an overall positive thing. And then once the hash rate goes down, there is going to be less supply added to the market because the miners who are already surviving probably don't need that much to actually operate. So then they don't have to sell as much BTC, and then there's going to be a reduction in supply in the overall market, which as long as there's some level of demand, will increase the price of BTC, and then the whole thing begins again. And the price of BTC increases, miners get interested because there's a lucrative opportunity, too many miners go in, hash rate drops, all that stuff happens again. It's a loop, it's a cycle, same as everything. So hopefully that was a little bit of a kind of an explanation on the miner capitulation cycle. Usually it mainly just occurs after some point of the BTC halving because the revenue gets cut in half. I don't think it's a minor capitulation just yet, just because we're in a massive bull run for 1B. It's not like they're unprofitable. They just have to relocate. And when they do relocate and start their operation up again, I think that the hash rate will increase. There might be a surge in hash rate because all the miners will be starting up after new miners coming into the network because of the reduction in the operational expenses to actually mine BTC. So enough of that. Let's move on to the next topic. Just wanted to give a brief explanation, or at least my opinion, on kind of the state of the minor capitulation cycle right now. I don't think we're at the cusp of a minor capitulation phase. Do not think that's the case. So let's minimize this window. Now we're going to be looking at the more traditional legacy assets. This is the S&P 500, and we talked about this expansion formation being bullish like we saw right here. This is a larger one, same expansion formation, and you got a strong push to the upside. And in my opinion, we're seeing something similar as well, where I don't know if we've made an all-time high. Nope, we have not, but we're really close to it. And after this consolidation, I wouldn't be surprised if we do continue an all-time high or continue to the all-time high. And if we are looking at a larger time frame, we can see that we are still in an expansion formation kind of within the middle. We do have a potential double top there, but if we do start to continue to move to the upside, this is a higher low from this low, from this low, from this low, from this low, from this low. So it does look like it's forming a series of higher lows with a series of higher highs that is well respected. And we are still a ways from our target of 4,800 looking at the weekly and daily chart of the S&P 500. So I think the overall direction is moving to the upside. And that's really all I'm going to be touching on. I think it's a really positive thing that we are seeing such a quick recovery from the dip to the downside for the S&P, because really, from a fundamental standpoint, the only reason we had that dip, from a technical, you can say that it broke an ascending zone, broke a key level of confluence for the ascending zone, horizontal zone. From a fundamental standpoint, the Fed Chair Jerome Powell did have a discussion talking about reducing the amount of stimulus allocated towards mortgage securities, as well as, I believe, bond buybacks, because they are the largest purchaser of U.S. bonds, which is pretty crazy. But I think they're basically, in short, being more hawkish, which is the reduction in stimulus. Right now, we're in a stimulus-driven market. If they're going to be printing more money, like Biden talking about $6 trillion added to the balance sheet, that's bullish for the S&P 500, for crypto, for precious metals, because the amount of units of US dollars it takes to actually purchase that asset is going to get greater and greater and greater, because it's just unbelievable at the amount of money that we're currently printing for the US dollar if we're looking at historical averages. So not much more to touch on within the S&P 500. We're really just going to dive right into the DXY, the Dixie, the US dollar index. Nice dip in the volatility index as well for the S&P, which is great to see. Let's go to the 2 hour and just leave it at that. Let's leave 4 hour. It's a little bit better. All right, now we're going to be completing this video looking at the S&P, or sorry, we just looked at the S&P. This is going to be the Dixie, the DXY. This is the US dollar currency index. It is, the majority of it, over 50%, is comprised of the euro. So if you're looking at Euro USD, it's actually going to be an inverse somewhat of this chart. So it should be looking on a long-term time frame very bullish, where the euro is going to be increasing at a greater rate than gold in appreciation. But both of the currencies are fiat currencies. They're both going down in relation to a hard money, a sound money. Like gold, I would say BTC is on that list as well, although some people may not agree. So looking at from a weekly chart, let's just take a step back here. We have been making a series of lower lows, which is great. Major level of support is around that 89 range, which would be the completion of the double top if we do actually break it. So Right now, we are really expecting, if the S&P is going to be moving up and BTC to be moving up to the upside as well, that this lower high is going to be holding for the DXY, and we're going to be seeing a consolidation similar to what we saw right here. So if we go to like a 2-day and then do something like this, ideally we'd be seeing something like this form, where we're going to be seeing a nice consolidation to the downside, forming a nice slow chill series of lower lows and lower highs, where it's going to be slightly moving to the downside, and this is going to give way and open up the doors for the S&P, for gold and silver to finally move to the upside. I think silver is finally going to break that $28 level of resistance, which is looking phenomenal, and BTC is going to hold and kind of form that same formation that we talked about at the start of the video in the springtime of 2019, where we're going to get that hold of the key level and then a break above that ascending wedge focus area, or I guess you could say the apex of that formation there. So overall, it's looking pretty good. We do see slight resistance if we are taking a look at a smaller time frame here. Just looking from a large time frame, doing some top-down analysis, we see a major wick. Look how significant that wick is. Not a perfect hammer. Ideally, we like to see the candle close pretty well at the bottom of the trading range for that 2-day time frame, but this is pretty well close to a perfect potential if we get a candle closure on this 2-day red bearish. If that's the case, I think we're going to be seeing a pretty strong aggressive push to the upside, but this, in my opinion, this candle itself right here is indicating tremendous amount of sell pressure coming in, lots of sell pressure, with the ability of the bears to push the price below the open of this candle, and it's a not a small candle. When we're moving on to a smaller time frame, the 12-hour or even like the 4-hour, you see a potential head and shoulders formation and a pullback, where let's just look. Oh, that's not the one I'm looking for. This is the one I'm looking for within the head and shoulders right here. So this is the left shoulder. We could look at a smaller time frame just to make it, but you have a good understanding of this head and shoulders right here, and then we're going to be looking for the rectangular area. Hopefully you see what I mean. The head and shoulders, it's looking like it's potentially topping here, and I think this is a great opportunity where there's going to be some negative correlation between the US dollar weakness and Bitcoin strength. We already see the S&P front run the Bitcoin chart in terms of price appreciation and breaking out of its pattern, but overall we do see a pretty negative correlation between US dollar weakness, BTC strength, Ethereum strength, altcoin strength, S&P strength, gold, silver strength. It's all going to be, in my opinion, moving to the upside, while the US dollar currency index is kind of forming a top right here. So that's going to be my overall analysis for this video. Thank you very much for tuning in. If you thought this was educational or informative, entertaining, if you got one little tidbit of information out of it, it would be greatly appreciated if you give this video a thumbs up and subscribe, so we know to make more videos like this. So hopefully you are having a good time being patient. It's definitely not a market that's favorable to permalongs right now, but the time will come. I think it's a really good opportunity to kind of load up on your favorite alts, set up your staking, or if you're a little bit more of a DeFi degen, going a little bit more into the liquidity pool state. But regardless, stay safe out there, and until next time, have a good one.